My name's Rick Schnitker. I'm with TPG Software. I've been at TPG Software going on 20 years now. I'm going to walk you through some of the options that we've added to the application with regards to the CECL requirements coming down the line. What I want to do first is talk about some of the options that I'm going to talk about today. First, I'm going to do a recap on CECL. What are some of the changes that we're going to add to the application to support CECL? I'm also going to go through a sample hold-to-maturity security mortgage-back, show you the CECL results, how we modeled it, and show you how that will process within the system in Excel. I'll also show you a hold-to-maturity bullet security. This will allow you to see how we will handle bullet securities, non-prepaying securities. So you'll be able to see the cash flows, how those were affected, and how we will treat those types of securities. I'll also go through the new AFS impairment option for mortgage-backed securities. Now, the new AFS impairment option, so there's no longer going to be an OTTI process. I'll show you what we plan on doing around that, where you'll be able to break down the unrealized gain loss between the CECL loss as well as the OCI component. So we'll create those entries. You'll be able to load that information in, and we'll be able to break out that those amounts and post it to the system. I'll also go through an available-for-sale bullet security, so you'll be able to see how that is applied as well to the system. And then finally, I'll go through the roll-forward report. Now, the roll-forward report was documented in the Price Waterhouse documentation on how you would want to roll forward these allowances for credit losses, and we'll create a similar report and summary as well as detail to show you the credit loss change over whatever period you're selecting to get the report details on CECL. So those are some of the things we're going to talk about, and then at the end, if you could use your help area, that would be great. The chat area, so you can push your questions through the chat area, and that way I can answer your questions through that process at the end. So let's do a recap on CECL. So what we know about CECL, it's the current expected credit loss over the life of the security. This is an amount that you will be able to apply to the system. Now, in terms of sourcing that data, what you'll need to do is you'll need to access it from a model source, some system or some process that you're going to create. A lot of our customers are using their loan system. Some people are going to source their information through Bloomberg, through Intex or Moody's. We're currently working with ZM and BlackRock to come up with a direct interface. We're in the early stages now. We're just figuring out what kind of data needs to be sent and the kind of data that will be coming back. And these are more credit rating models to produce a credit loss allowance that we can feed into our system so you can do the reporting out of TPG for the debt side of CECL. But those are early stage options. Now, given that we're going to provide these interfaces, all of the cash flow loading from Intex, that all stays the same through Excel spreadsheets. That doesn't change. If you're looking to load data through a spreadsheet, we still have that feature as well. So what we're going to do is provide that option in the data feeds area of the Portfolio Genius and Workstation. So when we look at the Portfolio Genius and Workstation, we're going to add an upload feature in the data feeds area for you to plug in your credit loss allowance balance. will also allow you to plug in the change in the credit loss allowance balance, as well as a percentage option in terms of your percentage of principal or par as your credit loss allowance amount. Now, let me go ahead. I'm going to bring up the application to quickly show you what that's going to look like. So here within the workstation, what you see on the screen here, we have our PG data feeds area. Some of our customers have it in Portfolio Genius. Others have it in Workstation as an option to select. And within that data feeds area, this is where you'll be able to see that option to enter in your credit loss as a percent, or as a balance, or as a change in balance. So you'll be able to load that data in from a file, and you'll be able to import that like you do so many other data points within TPG. So you'll be able to facilitate that load and load that into the system. We'll be able to also prorate that across multiple tax lots if you're loading it in at the CECL level. So that's loading data. So those are some of the features we added to the workstation as well as Portfolio Genius to load data. Some of the other options we added was to the GL. So in terms of creating the GL entries in the system, we had to obviously add the options for you to set up the accounts. And in the GL application, we did create some additional account setting options, one for credit expense and one for credit loss allowance. So you'll be able to put that information into the GL application. And I'll bring that up real quick. So here's our PGGL project here, or product. You can see in the matrix area, you'll be able to load in a credit expense or a credit loss allowance into the system, and you'll be able to store that new account in the system, and then you'll be able to map the events around CECL to those new account numbers that you're going to add to the system. You'll also be able to add those events through the map of accounts. You'll see in the map of accounts, you'll have those new accounts available to add those events as you need to post those GL entries as part of the process for CECL. And we'll be able to process, your initial GL entries as well as the ongoing change in that credit loss allowance. But you can see in the GL application, we'll be able to satisfy the event side as well as the account structure side. Now we know that initial, when you're going to first start recording these CECL amounts and these CECL processes upon conversion, you won't be, posting it to a provision expense. You'll probably be posting it to a retained earnings account, something like that. So we'll be able to facilitate that as well. We're still working through some of those things, but we'll be able to differentiate whether it is a new CECL balance versus an existing CECL balance that's changing. But just want to let you know that we do understand from a conversion standpoint versus an ongoing CECL change, we'll be able to identify and post those accordingly, those different entries. Next thing I want to go through is some of the options we changed in the Portfolio Genius as well as in the workstation. We did add some features where you can identify items as CECL records. We also added an effective date to determine the effective date of when the CECL is taking place. So you'll be able to report on that, and going forward, you'll be able to see that that record show up as a CECL record. You can also define it as a PCD, purchase credit deteriorated asset. You'll also have an option to apply the credit allowance to the amortized cost. Now, this is kind of a new feature, but we've heard some of our customers explain whether they want their in total rate of return affected by the CECL balance versus not affected by the CECL balance. So we're going to provide an option where you're going to be able to define whether you want TPG to affect your amortization, accretion, and yield, internal rate of return, due to credit-adjusted cash flows or due to contractual cash flows. It's really up to you. We're going to give you that option in the system, and you'll be able to define which way you want to go as it pertains to calculating your book values and yields. Let me bring up the workstation again, and we can go through some of those options that we added. So within the position, I'm going to go ahead and click on my position here, my sample CECL record. This looks like any other position you might have within your portfolio. And using our system, you can see the position record with its multiple tabs: trade ticket, setup, book value, and accrued interest tab. You can also see the processing tab. Now, under the setup tab, under the amortization area, we did provide an option for you to enter in your credit loss allowance balances. You can also define whether it's an initial balance for conversion or if it's just a new balance given an effective date. We also added under the advanced setup area a way for you to define whether it is a CECL record, what is the effective date of that CECL record, is it purchase credit deteriorated asset, also do I want to adjust the yield based on the credit adjusted cash flows, applying the credit loss allowance to the amortized cost. So we're giving you those options at the position level for you to define whether it is the CECL record and how you want to process it around that expected credit loss balance. Some additional features we've added back under the dashboard area within the workstation. We do also have a summary record area where you can see a summary or a blotter as of a given date, the current CECL balance. So you'll be able to see, as of a particular date, all of your CUSIPs that you've identified as CECL, what the effective date is, and the percent of the par, whether it's unrealized gain loss, if it's an AFS security, and how you're handling the credit loss allowance for that as well. So this grid will be, you can export it to Excel. You'll still have all those features, but you'll be able to search and find your records that are CECL related in the system through these through this blotter, this new blotter that's going to organize that data that way. All right. So those are some of the changes we're adding to the system. This gives us a starting point to identify those records and really allows you to identify them and load data as you need to support the CECL process. Next thing I want to go through is through Excel, how we plan on modeling, HTM securities, how we plan on handling the effect of the expected credit loss to your existing positions. So you're going to have a couple of options. One where it's going to allow you to, we're just going to amortize and accrete securities like they currently do in the system based on the accounting method you're using. And the internal rate of return is not going to change. And the other option is where we're going to adjust the yield and the cash flows to the credit loss cash flows, and the yield is going to be reflected as part of that expected credit loss baked into the cash flows. So we're going to give you two options, and you can choose which way you want to go around that process, whether it's a PCD, a purchase credit deteriorated asset, or whether it's not. So I'm going to bring up an Excel spreadsheet that really describes that process and what we're doing. So the first thing we're going to look at is a mortgage-backed, a prepaying security that has credit loss. And this is an example where we are adjusting the yield to the credit losses and the cash flows based on the expected credit losses that you've loaded in the system. We can see here I've got a credit loss of $217,000 for this one, and due to the credit losses I've loaded, I've adjusted my cash flows based on my contractual cash flows based on that credit loss, which will then give me a yield that is going to be slightly lower. And it's also going to force the system to amortize to a value other than 100. We can see over here illustrated in the graph where we're accreting from my purchase price to 90. So that's really net of that expected credit loss. We're basically going to give you the option to adjust credit losses over time, and it's going to automatically adjust that as payments come in. And if there's no losses, we can auto-adjust the expected credit loss down as you get those principal payments in the system. But we plan on doing that automatically along with sells, calls, write-offs, maturities, where the system's going to have some automatic routines where it's going to write down the credit loss based on specific events that occur in the system around disposition of the par value or principal. But you can see here, this is an example where we are affecting the yield and we are amortizing to a price other than 100, and it's going to only accrete the balance between the credit loss amount and 100. So it's not going to fully accrete the premium amortization that was at purchase. Now we also have an option where we're going to basically just track the credit loss allowance on a contractual basis, where we're not going to adjust the cash flows. And here you can see here in this particular example, I'm going to amortize and accrete this position all the way to 100. I'm tracking the allowance for credit losses off on the side, and I'm just tracking it for purposes of reporting. I'm not affecting the internal rate of return, and I'm using contractual cash flows to come up with my yield in my amortization schedule. So you can see here I'm amortizing from my purchase price all the way to a price of 100. So this is the other option we're going to provide. So whether you want to use credit-adjusted cash flows or you want to use contractual cash flows, we don't really care. We're going to give you both options so that the user can decide how you want the system to model it and affect the book value as well as the internal rate of return. So that is a prepaying security. We also did this for a bullet security as well. So here we can see a bullet security using using credit-adjusted cash flows. Sorry, we did credit-adjusted cash flows. We can see our yield. This particular bullet was purchased at 85, and it's going to accrete to 90. So we're using a credit-adjusted cash flow, and we're only going to accrete from 50,000 as opposed to accrete 150,000, where 100,000 represents the credit loss balance. And here we have a graph over here where we can see the price go from 85 to 90, and we can see how the book price changes over time and what the book value is going to look like over the life of the security. But this is an example of a bullet security that pays on a contractual basis at maturity or at call, however way you want to handle the cash flows. We'll be able to support that. Now this is with the yield adjusted due to the credit adjusted cash flows. Now we can also see, well, what if we don't apply the credit adjusted cash flows to the model process? Here we can see the yield increases. We can also see we can amortize to 100. This is another example where we're just tracking the credit losses on the side, and we're going to fully amortize or accrete the total discount from 150,000 to 0. And we can see our price go from 85 to 100 as we accrete the bond. So this is another example of where we're not adjusting the yield due to the credit allowance. We're just tracking the credit loss allowances on the side, and we'll have the reporting for it separately. And it doesn't affect the amortization accretion. It just is going to amortize and accrete and calculate your book values and yields like it currently does in the system. So those are the options we plan on providing in terms of hold-to-maturity securities. Now, for the new AFS methodology, OTTI is going to go away. This is where we're going to handle the difference between OCI and the unrealized gain loss. We're going to be able to post that to a credit loss expense as well as to a credit loss allowance balance. Now, within our process, we're not going to allow the credit loss to be greater than the difference between the amortized cost and the fair value. So we'll have controls in place, as well as the fair value will have to be below the book value. But now that OTTI is going away, we're going to be able to support that additional mark-to-market entry that's going to allow you to split out that unrealized gain loss correctly. Now, we do see it kind of working the same way as the HTM side. We're going to give you the same options, whether you're going to handle the book value from a yield adjusted based on credit loss adjusted cash flows, or not, or contractual cash flows. So I'm going to go ahead and pull up that spreadsheet real quick so you can see exactly how we'll treat that. So in this particular spreadsheet, I've broken out AFS impairment. We're also doing it from the mortgage-backed side as well as the bullet side. You can see over here in this particular sample, if the fair value is below the book value in this particular case, we will break out that unrealized gain loss into the OCI as well as the allowance for credit loss. And we'll be able to create that GL entry as part of the mark-to-market entries. Then we'll reverse it and post it on an ongoing basis as we see that credit loss allowance change over time. So we'll be able to support, also you'll notice down here for AFS securities, once again, we can adjust the yield based on credit adjusted cash flows or not adjust the yield. And you'll have samples in here for mortgage backs as well as bullets. You'll be able to review that in the Excel spreadsheets. All right, so I'm going to go ahead and move on. Next thing I wanted to go through was reporting. So Pricewaterhouse put out a roll forward report process similar. A long time ago, everybody was looking at the market loss report, but there is a roll forward report that we'll be providing in detail as well as summary. And it will allow you to run the report from a beginning of period and end of period, much like all of our reports. You'll be able to see the credit losses on securities that were not previously recorded, but we'll be able to handle all the different groupings that are part of this new roll forward report for handling CECL debt. So that'll be another option that we'll have in the system to report on the CECL securities. And that kind of brings us to the end here for my demonstration. Some of the things I want to talk about now are really kind of next steps with the CECL process. You know, we want to come up with a CECL committee. If people are interested in forming a CECL committee, you can email me, and we can form a committee that we can meet a little bit more regularly and go over the updates. We do have a functional spec document that we are working with. So as changes are made to this system, we are documenting what we're updating in the system. We can give you the structure of the database changes. We can also give you the field names, as well as all of the business requirements in that functional spec and kind of what we came up with. And we can go over that through this CECL committee, and I can distribute it through there. But I think that's kind of a good next step, so we can, keep up with some of the changes that are coming down the line. Also wanted to bring up, if you do have any custom options, you don't like what we have, we will just evaluate what those custom options look like, and it might go through an SOW process, or it might actually be beneficial to other users, and we might include it in the product. But we'll make that determination when, if you're looking for something different and you want something added to the system, we can review that. As far as call reports, I think we're waiting on the modifications. I think those comments are coming down this month in terms of what the call reports are going to look like around the CECL process. But that's pretty much it. You can see my contact information here on the WebEx. So if you could email me if you have any specific questions you want to ask directly to me. If not, then I'm going to go ahead and open it up for questions through the chat area. So if you do have some questions that you want me to answer, if you could please go through the chat area so that I can answer any questions. I have one question here. It looks like some people are asking some questions around CECL. Are you issuing CPE certificates for CPAs? No. We are just a software vendor. We're not a accounting. We're not an accounting group, so we can't offer CPE certificates or hours. There's also another question. Are you adding a field for amortization type? Bullet, linear, constant installment. Currently, we just plan on using our existing bullet models for calculating the internal rate of return, level yield 5 method. I can provide you with those spreadsheets, and you can review those. And if you're looking for a different modeled result based on those spreadsheets, you can let us know, and we can go through how we can make those changes. I also have another question from somebody. It asks, when will the TPG CECL updates be issued to clients? Based on the release this year, we do have some customers that have functionality around CECL, but we plan on finishing it out probably Q1 and Q2 of next year. It's going to be a rounded out product by then. But we do have current customers running some components of CECL right now based on what I showed today. But we are always making modifications and updating the application, but I expect it to be rounded out and finished as we get all of the customers' comments by at least Q2 of next year. I know that's kind of rough for early adopters, but I think most of our customers are really diving into the loan side and haven't really even considered the security side. So the effect of CECL has wide-ranging effects on everybody's organizations. So I think there's going to be few early adopters, but I think testing next year will be paramount, and you'll want to make sure you get on that process early. We have a question. Will the CECL updates be supported on the PG version 7.0.26? No, it will not be supported in that version. It will only be supported in our latest PG version as well as the workstation version. I think we're up to 8.0.14 on the PG version, and on the workstation 9.0.5.9. So it won't be available. So if you do need to upgrade, you need to contact Travis for any upgrades and scheduling those upgrades so that we can give you the CECL options, and so you'll have that within the product.
I'm getting pissed.
Any other questions? Just waiting for other people with other questions they might have in the chat area. Have another question here. Are the same existing TPG amortization methods need to be changed, or do we just instruct the system to amortize and accrete based on the adjusted cash flows, based on the credit losses, or stay with amortization accretion based on contractual cash flows? Just so we're clear, the amortization methods are not changing. You're just going to tell the system whether you want to use a contractual cash flow to calculate yield and book value, or if you want an unadjusted or a adjusted credit loss cash flow to calculate internal rate of return and book value. So the same models should work that we already have. I also have another question. Can you provide everyone a summary list of to-do items that will be necessary by TPG users? Update account mapping table, etc. That's a good question. I will certainly follow up with that, and I will post a to-do list in terms of what to do and really how to implement the CECL process within TPG. I can definitely put that together, and I will pass that out. It also probably be sending out questions in terms of where do you expect to get your modeled results out of the system. Are you going to use a loan system? Are you going to use another external source? Have you guys thought about where's your source for this expected credit loss amount? I'll probably be sending out a questionnaire around that. So if you guys could definitely answer that for me, I would appreciate it. And that'll help us with our development process. Have another question. I see there is a credit loss allowance button in TPG Workstation. How does it become activated? If you see it on your side, it should be available unless, for security purposes, it was turned off, if it's in your version. But it's going to be a standard option within the application. So you'll be able to, in the setup area, apply that credit loss allowance. If the button is disabled, it's probably due to security privileges and it's just turned off. I have another question. Will you also post the slides for download? Yes. We will post the webinar. I'll also post the webinar. I have recorded this webinar, so you'll be able to go back to it and view it when you need to. Any other questions? Have another question that says, can we recap the changes under CECL? Yeah, so just as a recap in terms of changes, well, within the application, we can talk about how we're providing the ability to load credit loss in the system, where you can load it in through the data feeds area, whether it's PG or Workstation. We'll also have the ability to enter in an amount manually at the position level. We will also record the changes in credit loss allowance. So we will have the ability to process the credit expense as well as the credit loss allowance in the system. Whether it's a hold-to-maturity security or if it's an AFS security, we'll be able to break down the unrealized gain loss component between OCI and expected credit loss. I have another question. Can you let me know that the slides and presentation will be posted in the knowledge base through the customer portal, and if they need access to the portal to contact CSG? Yes. So, yeah, we will also post that the slides and that the presentation will be on the client portal for you to access the changes that I presented today, along with the ability to view the spreadsheet models. Will there be further webinars with updates on TPG's progression regarding CECL? Yes, there will be. And what I would like to do is really kind of get a CECL committee together. With your help, you guys can send me information about who might want to join the CECL committee so I can just funnel questions on all the pertinent parties within your organizations so we can come up with a consensus in terms of the changes made to the CECL process. So I think what I would like to do is, let's say the next webinar could be in the middle of December, where we could actually go through some of those changes. I can show some of the options that we posted to the knowledge base, give you an update on where we are with the CECL after a month of any comments that we're getting after this webinar. So there'll probably be look for another webinar in the middle of December before Christmas, and we can go through those updates and some of the changes that we're making to the product. So please email me, and we can form that CECL committee and really pass this information on to all the people that really want to look at it, review it, and provide comments on it. Any other questions? So I think what we'll do is we'll schedule that webinar for next month, and we will have that available to you. And I'll make sure everybody gets that, and then please email me if you want to join a CECL committee to kind of drive the changes. There was another question on when will this webinar be loaded to the portal. Yeah, I'll work with Ursula. I know Ursula's on. She's unmuted, so Ursula, you can talk as well. But we'll be able to post the webinar here shortly, probably within the next few days, once we facilitate that. John Heineman, our compliance person, will have to go through the documentation and make sure it's all up to date and something that we can post on the portal.
Yes, we will get it out there, in the next few days. What's today, Thursday? It should be out there, say, Monday.
Yeah.
For Thanksgiving.
Yes. Any other questions?
So just
okay.
Just to summarize, Rick is going to put together a list or a document like how to prepare for CECL, and we'll also put that out in our customer portal site or the customer. I think we also have another site on the web, and then also
the knowledge base.
Right, the knowledge base, and so we'll post a little summary as well of anything that we get as far as comments or questions from you. And I think the most important thing is to form some kind of a committee to help direct our development of because you're the guys that are going to be using this. So that's really important as well. So I think that's all I have to comment on.
All right. All right, thanks everyone for joining the webinar. I'll do another webinar, look for another invite middle of December. We can go over some of the changes. Might be just a quick webinar if not a whole lot of changes have been made, but at least I'll show you, and I'll probably just walk through a transaction within the system and show you the roll forward reporting and how that's going to work. In the next demonstration, I'll just work through the application as opposed to going through the PowerPoint and Excel models. I'll just walk you through the process within the system. All right. Thanks everyone for joining. Hope you had a good rest of your day.